All right. I've been getting a ton of calls today by people who are filing their taxes, right? They're not getting good information from their tax accountants because they shifted their W-4, but they didn't deduct nothing all year. So of course, if you don't take advantage of any tax deductions, what's going to end up happening is that it's going to seem to your tax person that you got too much money up front. You didn't pay the government enough money all year round. But that's not the case, guys. The whole benefit of getting started in business was to be able to maximize on these deductions, right? Most people, think about it, y'all, as entrepreneurs, you get about 450 tax deductions that you cannot get as an employee. So we gotta leverage that. We gotta make sure that we're maximizing on that and maximizing as many deductions as possible as possible all year round. Okay, so some of you guys who are brand new on the line, you may be brand new to the Nove Money affiliate program. Some of this stuff may not apply to you at this point because you just got started, but this is still great information because this is what you're going to want to apply next year when it's tax time for you. Okay, if you have been in business for a while, this is definitely super important for you because we want to make sure that you want to pay the government what you owe them, but you don't want to pay them $1 more. Okay, and the problem with using things like standard deductions or as employees is we get overtaxed. We pay way more than we're supposed to. And then at the end of the year or the following year, you get a tax refund and people are happy, but a refund isn't a gift. A refund was your money that you overpaid, right? So what we do here is we show you how to not pay $1 over so that you pay exactly what you're supposed to pay the IRS, okay? So I just want to run through a couple of the tax deductions that you want to make sure that you are tracking or have tracked all year. Now, here's the caveat to that, guys. I know a lot of y'all ain't been tracking nothing, right? I know a lot of y'all been slipping. Y'all haven't been tracking. The great thing about it is that before you file your taxes, you still have an opportunity to go through your numbers and try to make some guesstimates or some estimates, okay, of these deductions so that you can really, fare out pretty good during tax time. So the first thing, guys, you want to realize is as an employee, you get paid on a W-2. So everyone already probably got their W-2s at their job, right? They send them in the mail, they come and pass them out at the desks. Everyone get their W-2, which says how much money you made at your job this year. That's what you use to file your taxes. Now, here's the great thing about everyone on the line tonight. You're a business owner. So you're also going to be able to file what's called a Schedule C. Now, here's the thing. If you haven't made over $600 in your home-based business, you won't get an actual 1099 from MyEcon or from Nove. But not to worry, it's not required for you to be able to file the Schedule C. Remember, you don't have to actually make a profit in your business. You just have to have the intent to make a profit. So what does that mean? That means that if you didn't make no money this year, it's all right. Once you are trying to make money. Remember, guys, Amazon didn't make a profit for 12 years. Now Jeff Bezos is about to be the first trillionaire in the world, right? So don't worry about where you're starting. The goal is to stay focused on where you're trying to go, all right? So you're not going to get, actually, let me just show you all real quick because it's right here. I actually just got so this just came in the mail. See the name on it? It says MyEcon. I don't know if y'all can see, the lights are too bright. But this is basically my 1099 from MyEcon because I made more than $600 from them. They're going to send you a 1099 to turn in with your taxes to say how much money you made from them. Okay? If you didn't make money, it's all right. You still can claim all the deductions. All right? Now, when you're filing your taxes, I don't know if you guys do them on your own with TurboTax or some type of software, or I don't know if you got a tax person, but just make sure when you're filing your taxes, in addition to your job, that you file as a business owner as well. Okay, let's make that clear. So you want to let your CPA or your tax preparer know, listen, I work a job, here's my W-2. I also have a 1099. I also have a business. If you haven't made any money, you won't have a 1099, but you still have a business. So you want to let them know and say, listen, here are my deductions. The business deductions, y'all, is where the money is at. So you've got to let them know. I had a phone call, from a teammate today. And she called, she went to her tax preparer, and she called me upset. She's like, yo, I just filed my taxes, or I'm trying to file my taxes, and they're telling me I owe $2,000. I'm like, did you turn in your deductions? She's like, I don't have no deductions. I said, you've been in business for 16 months. All you got is deductions. Now, if you didn't track that, that's on you, but we can still save the day. Don't panic, all right? So I just want to go over a couple of deductions that every single one of you guys on the line need to be taken advantage of. You need to give yourself an estimate of these deductions, because this is going to be the difference between them telling you bad news like you owe and them telling you good news like the government owes you. I hope you want to be on the other end of that sentence, right? You want the government to owe you. So here's the first thing. Your MyEcon or your Nove Money, whatever business you're in, your membership that you pay every single month is a tax deduction. So if you're in MyEcon and you've been paying $34.95 a month and you've been in the business for 12 months, you've got a deduction of 35 times 12. Okay, let me get my calculator so I can do the math. Just want to give you guys an estimate of how quickly, and someone drop in the chat and keep track of the numbers so we can see how quickly this adds up. Okay, $35 a month times 12 months, that's $420 right there. Okay, $420 deduction right there just on your membership. Okay, if you're in Nove Money, we just got started, so you may only be able to file a month or two of your taxes if you got started in November and December, but it's $50 a month times 2. That's another $100 right there in deductions. All right. So your MyEcon and your Nove, the cost of your business is tax deductible. If you're on the line tonight and you are in Nove Money and you got started in November or December and you upgraded to the $500 package, guess what? That $500 is a tax write-off. That's deductible. All right? That's a tax write-off. So your MyEcon membership, your Nove Money membership is a tax deduction. Make sure you are tracking that. Make sure you count it, guys. If you're not tracking these things, you are giving away your money. All right? The next one, education expenses. As a business owner, you're eligible to write off all education expenses. So that's if you've been to any conferences, any blueprints, any of the MyEcon trainings in the past year, the cost of the training, if you paid $97 to show up, $150 to show up, if you went to the super regional training in Miami and you paid $100 to show up, all those things, y'all, are tax write-offs. Okay, seminars, conferences, any online courses you may have took. I take online courses all the time. I like this guy. His name is Ty Lopez. I take his courses all the time. He gets my money all the time. So now I can write off those education expenses. Books. If you bought any books throughout the course of the year, those are tax deductible. Here's something to note, and this is going to make you guys sigh, get a sigh of relief or a woo-sigh moment. In the United States, the only receipts that you actually need to show are any expense that's over $75. Now, I'm not saying that you don't want to keep receipts. If you've got receipts, that's great because you've got backup. You've got a paper trail, but it's not required. Okay? So if you've been falling off all year round, tracking your receipts and tracking your expenses, make sure that you actually still itemize your deductions. You don't need a receipt unless the expense was over $75. So here's an example. Let's say me and Pam and Shiz go to lunch. We're at a blueprint, we go to lunch. I say, okay, y'all, I got y'all. And I buy lunch and the bill is $50. I don't really need a receipt. Okay? I can still write that meal off without a receipt. But let's say, me, Renetta, Albert, and Valerie get together. And they just think I'm balling and they buy steak and lobster. And the bill is $150. I need a receipt for that expense because it surpassed $75. Does that make sense? All right? I know I can't see none of y'all, but I hope that made sense. So don't trip too much if you don't have your receipts. You do want to get in the habit of keeping receipts so that you can cover your butt, but it's not required. In Canada, you need receipts for everything, but in the United States, only expenses over $75, you need the receipts. All right? Here's another expense that I know most of you guys on the line have had this year. Advertising expenses. Okay? Advertising expenses. If you've got business cards, that's a tax write-off. If you bought any marketing materials, either on your own or from MyEcon or from Nove, that's a tax deduction. If you ran any ads, guys, that's a tax deduction. Guess what else is great? Even if you ran ads on Facebook, is online or offline, anything that you did to advertise your business is a tax write-off. So you want to, make note of that.
So Sophie,
yes,
if you don't have the actual receipt, but you can show through your bank account that you had the transaction, that's just the same thing, right?
Exactly, it's the same thing.
Okay.
And yeah, so that's why a lot of us swipe for everything. So you do have a paper trail because you can actually go through that transaction. Okay, so you can still track your expenses through your bank account. Now,
And I'm gonna need that lobster too.
All right, I got you, girl. Okay, hang on one second. Chris Dior, just unmute yourself and ask the question. Go ahead.
Yeah, hello?
Yeah, go ahead.
Yeah, so in regards to the MyEcon fees, can we just put in the cash flow manager that is the fee for MyEcon?
Yeah, you just put MyEcon subscription, MyEcon membership, $35 every month.
Oh, or we could just add it up to $420, right, for the year?
Yeah, you can do it however you want. You don't have to actually put it in monthly. You can do annual expenses, but just categorize what it is.
Oh, all right, I'll do that.
Yeah, for sure. And Yanni just gave me another, good reminder is that, the tax game changes, right? The tax laws change from year to year. So one of the new tax laws for this year, 2018, is they're changing that meals and entertainment tax deduction. You're only going to be able to write off meals and entertainment if you're on travel. And what they consider travel is any overnight stay away from home. Okay, so all of us going to the blueprint coming up in the next couple of weeks, we're going to be overnighting. Guess what? That's a travel expense. You can write off the flight, you can write off the hotel, and you can write off all meals and entertainment. So the bowling tournament, all of that, whatever you spend, that's going to be a write-off because that's a business expense away from home while you're on travel. Thanks a lot for that, Ayana. Okay, so
go
ahead.
Just a quick question. In regards to MyEcon, I have written it off as Nove powered by MyEcon. You think I should change it to MyEcon, or it's not gonna matter?
It don't matter. It don't matter because at the end of the day, they're gonna. If you ever were to get audited, they're gonna get to the nitty gritty of it anyway. It ain't gonna be about the name. It's gonna be about that 35 that you're claiming, and you'll be able to show that because you've been active in business for over a year.
Got you.
Right. All right. Perfect. Appreciate that. That's a great question. Another one you guys need to keep in mind. This is my favorite deduction. It's your truck and car expense. Okay, your vehicle expense. Now there's two ways you can actually claim for a car deduction. You can either take what they call the standard deduction for your car, which is, basically mileage. So the government gives you a little bit more than 50 cents per mile you drive for business. Okay, so let's just say in a year you drove 10,000 miles. And let's just say 50% of those miles were business miles. And the government gives you 50 cents per mile. That means that you just got yourself a $2,500 deduction for driving those 5,000 miles. Y'all, that adds up quick. If you like me, y'all know I do every video from the car. I drive a lot. So I drive like 15,000 miles in a year, and about 80% of my miles are for business. So if I got 10, that's like more than a $5,000 deduction just for driving. Okay, so don't sleep on the mileage. You can take your mileage deduction, or you can take what we call the expense deduction, which means gas, repairs, oil changes, car insurance, those things. So what I would recommend you doing is if you have your receipts for those things, or you have an estimate of what they will cost, see which one balances out to the higher number. If it's your mileage or if it's your expenses, and go with the one that's going to give you the biggest deduction. All right. Another one. We talked about meals and entertainment, right? This year through 2017, Yanni, correct me if I'm wrong, we can still deduct the meals and entertainment for this year, right? Because it's our 2017 tax return, correct? Y'all correct me if I'm wrong. But I think with meals and entertainment, basically the way it worked was 50% of those meals were tax deductible. All right. So someone clear it up for me. Let me know if that's something that's off the table for this tax season, or if that starts for when we file next year. Okay. Office deductions. The home.
Yeah.
Go ahead.
It don't seem like they can enforce a law until the law comes into effect.
Okay. So that's for next year.
Yeah.
Okay, cool. So y'all rack up the food, rack up the food receipts. Okay, the meal receipts. The home office is another big one. Okay, the home office deduction. Basically, you have two ways to do this as well. If you've got a small area in your place, less than 300 square feet, that's your home office, you're probably going to want to go with what they call the standard home office deduction. That basically says that you can get $5 per square foot up to 300 square feet. So it maxes out at 1,500. That's for people in small spaces. That's like me. This is my office. It's not 300 square feet, right? But if you've got, if you're like, Mr. McDaniel or like Brian Bean or these guys who've got foyers and studios and stuff, then you want to actually calculate the percentage of your house that's actually your office. And that means that the percentage of everything at that home that percentage is tax deductible. What do I mean? So let's just say 10% of the house is, your office. That means 10% of your rent, 10% of your light bill, 10% of your water bill, are all tax deductible. The home office, guys, is a big one. So if you have a designated space in your house where you do business, where you have your computer set up, where you have your books, calculate the square footage and you're going to get $5 times that amount of square feet. And that's a deduction. Okay? Don't sleep on it. Another one, office expenses. That means your computer, if you bought one. Not if you had it for 5 years. All right, if you bought a new computer, that's tax deductible. Paper, ink, pens, like my whiteboard. I finally stopped being cheap and bought a whiteboard, right? So that's a $40 whiteboard. So now that's a tax write-off because that's for business. All the little dry eraser pens. All of those little things, y'all be spending money on it. Use it as a deduction. Don't sleep on these deductions. Don't just give Uncle Sam your money, man. We're working too hard to just give it away. Postage, okay? If you're mailing things, sometimes you mail products to, you may have mailed Sprayology to someone in another city or another state. You may mail letters or flyers or brochures. Your postage is also tax deductible. So you definitely want to keep, track of how much you've been spending. A great idea, like Darryl mentioned, if you haven't been keeping your receipts, I would tell you, take a few days before you do your taxes and just go on your online banking and look at all your transactions and see which transactions were business related. And then you can actually categorize them and use those deductions. All right. Travel is a big one. Like I mentioned, we got the blueprint coming up real soon. Your flight is a tax write-off. The hotel is a tax write-off. All the meals while you're on that trip are tax write-offs. You want all entertainment while you're traveling is a tax write-off. So you want to make sure, go through every event that you attended in the past year. A lot of y'all, a big one is going to be Miami, the yacht party. You pay a couple $100 for your flight, several $100 for your hotel, Uber, the food. That's going to add up. So make sure you're tracking these things, all right? Yes, it does require a little bit of work. Yes, it requires some effort. But would you prefer to just give your money away? I hope not. I hope you're prepared to, sit down for 2 or 3 days, take a weekend, don't do nothing and focus on getting your taxes right. It's a part of being a business owner. You can't want to be a millionaire or make big money, but you're not willing to do what big money people do. And they don't pay $1 more in taxes. All right. So you got to start to form the same habits. We almost done, guys. Communication. Okay. This is another huge expense. Your cell phone bill. Most of y'all spend at least $100 a month on cell phone. Times 12 months. That's a $1,200 deduction just on your cell phone. If you got a home phone and you have a home office, that same percentage of the office, of the same percentage of your home phone bill is deductible as well. Y'all, let's add up fast. All right, your internet bill. We're an internet-based business. So if you're paying $60 a month for internet for 12 months, that's a $720 deduction just on internet. Y'all see why rich people keep their money in their pocket? Because they deduct everything. And they keep great records. All right? So we got to get into the habit of keeping better records. So if you fell off last year, it's only February. Get into the habit, y'all, of keeping records so that in 2018, you're on top of it. Okay? You're on top of it. And the last one, this one, I don't know too much about. Ayana might know a little bit more about this one than I do, but I know it's a big deal. And if you want to know more about it, just YouTube it, Google it. Wages. If you're a home-based business owner, you can actually pay your kids. Okay? You can pay your kids a certain salary that's going to be tax deductible. If that's something that may benefit you, look it up. It's available to you guys. I like to call these tax deductions, they're almost like little loopholes that the general public just don't know about, right? But we're able to take advantage because we invested in ourselves. You know, you invested $35, $40, $50 a month into you, and now listen, look at how much money you're able to put back in your pockets, all right? The final thing is this, and this is a question that most people, I'm sure, will have. When you're actually going to fill out your taxes or file your taxes, on your Schedule C, and if you go on YouTube, man, there's a tax training with Mr. Ivy Stokes going over the Schedule C. So I would recommend watching that video with a blank Schedule C so you can kind of have an estimate of how to do this. There's gonna be a part on that form that's gonna ask you, like, for your business name. Don't put my econ. You put your name because you are a sole proprietor. You're gonna put your name. It's gonna ask you what's the type of business. I would say something like this. You know, you're a marketing representative selling financial products. You know, you just want to basically give a quick description of what it is that you do. It's gonna ask you for a code. Okay, what code is your business? Because they have codes for every type of business there is. For the one that we're gonna use, guys, and you might want to write this down, is 454390. Okay, 454390. And that code just stands for a non-retail direct sales. Because we are in sales, but we're not in a retail store. Okay, so that's almost like what we call other selling. And that's what network marketing would fall into, that code. Okay, so 454390. And guys, like, these are just some basic things that you can capitalize on when you're filing your taxes. Okay, so if you haven't been keeping track, it ain't too late. You still got time to file your taxes. Okay, you want to take some time and maximize this so that you can lower your taxable income. All right, use the Cash Flow Manager app. You've been paying for it all year. Use it. Okay, use it. It's in your back office. It's there for you to track your expenses. It has categories. It has, you know, there's 4 things you've got to say when you're tracking an expense. When, so that's the date. What business purpose was it for? Who were you with? So if you say, I went out to eat and I had a meal for $35, with who? You can't just be eating by yourself. You just got to have someone else that you were there with, okay? To have that meeting and make it valid, make it legitimate, make it a legit expense. And you've got to say, what was the purpose and what for? So you have to say, you know, this was a meeting and this was a client appointment or something like that. And it's not like it has to be correct, guys. It's just for a way for you to be able to categorize and make sense of what you've been doing all year round, okay? And that's going to allow you to lower your taxable income. And I just want to do one quick example really quickly before we get out of here. And then I'm going to open it up for any quick Q&A, and I'm going to let y'all enjoy your Friday night, okay? But check this out. All right, so this, y'all can see my whiteboard, right? Mo, just shake your head yes, because you're the only person I can see. All right, cool. So here we go. And someone do the math. Christy, you look like you're good at math, so do the math for me real quick. Let's say, you know, you made $40,000 this year. My writing's gonna be horrible, guys. And y'all already know that, you pay about 30%, give or take, in taxes, right? So if you made $40,000 and you didn't have a home-based business, you would basically have to pay $12K in taxes. Okay? Now let's say you made the same $40,000, but you itemized all your deductions and you ended up with, let's say $10,000 in deductions. Deductions just mean that's what you deduct from your income. So that means that your taxable income will actually be $30,000. So if you had to pay 30% on $30,000, you would owe $9K. Guys, that's a $3,000 difference, right? Just by writing down keeping some records. But let me blow your mind. If you really maximize your deductions, so you start with the same 40,000, but let's say you, like me, you try to deduct everything. And let's say you end up with $20,000 worth of deductions all year round. That means that your taxable income is $20,000, right? $40,000 minus the $20,000 deductions. And if you have to pay 30% on $20,000, you only owe $6K in taxes. So guys, without a business, you would have owed Uncle Sam $12,000. With the business that you kept good records, now you only owe him $6,000. You just cut your taxable income in half. Okay? Here's why this is important. If you shifted your W-4, the extra money that you got in your paycheck every single week, these deductions just legitimized it and made it like you won't have to owe. You see what I'm saying? So going from $12,000 in tax, which you owe for taxes, to $6,000, just because you took advantage of a home-based business and kept some records. Y'all, if that ain't worth taking 2, 3, 4 days a week and going through your bank account and seeing exactly as many things as you can deduct, y'all, I don't know what is. All right? Because I don't like giving away my money. And I'm sure y'all don't like it either. So I hope y'all got some type of value. Like, I hope you got some things that were made, a lot clearer. Like Chris Dior said, Google Sandy Botkin. Sandy Botkin. He is a tax guru. He used to work for the IRS, and now he gives you all the tricks, as an entrepreneur, especially in network marketing, to be able to maximize, all the tax laws. So you can Google him, you can YouTube him. He has a YouTube channel with some amazing videos on just about every expense or deduction that there is. All right. So y'all, I'm gonna just shut up for a minute. Feel free to unmute yourself, ask any questions. If I don't know the answer, I'm gonna find out. All right. Well, feel free to take it away. Go ahead, guys. I know y'all got some kind of question. Don't be shy, man. Y'all like y'all in 9th grade. Come on.
I got one.
Go ahead, Chris.
So in regards to like cable, you can only write it off if you're watching like educational.
I don't know if you can write off cable. You can write off your internet, but you can't write off the cable though. Like, you can't write off your Netflix and say, I was watching business documentaries.
No, I was thinking about like stuff on CNBC and CNN and what do you call it? Other
financial stuff.
Yeah, like the channel that Shark Tank be coming on. I think it's CNBC. So I was thinking like if you watch that one particular channel, like, or maybe not that one particular channel, but like that's channel you watch most of the time. Like, can you write like a percentage off?
I'm not sure, but what I would say as a rule of thumb is, if you have some type of expense like that where it's a split between business and personal, it's only going to be a percentage that you can use. You can't write off the whole bill. So let's just say, you paid $50 a month for cable and you watch one channel. That might only be 2% of the bill or something. And I don't think you really could do it. I wouldn't bother, because you don't want them to red flag you for nothing crazy.
Right.
You don't want them. The only reason the IRS is going to come after you is if you got some crazy stuff, like 100% of my apartment is an office. They're like, where you sleep then? Right? Like, you can't do crazy stuff because you don't want to raise any red flags for them to want to audit you, But even if you are audited, if you do keep good records, you're covered. But for a lot of you guys who may not have been keeping great records, you want to play it super safe so that they have no reason to come and audit you at all. Okay, so be extra lenient with what you're deducting. But that's a great question, Chris. That's a good thing to Google with Sandy Botkin. See if you can find the answer to that.
Yeah, Chris, but right now, don't use the cable, man. Don't use it.
Oh.
No, I wouldn't bother with it either, because it's just like, yeah, it's too hard to justify. You know?
Yeah.
What else? Anybody else got anything else? We have 5 minutes before this meeting ends. Anything else? Taxes? And I mean, while you're trying to figure out some questions, if you're like me, like I said, I had 3 phone calls today for my econ associates calling me like mad at me. And they wasn't even my personal recruit. There was people on my team's recruits. And they were going to file their taxes, and, you know, they adjusted their W-4, and the people were telling them they owed money. And I asked, you know, what deductions, what's the number of deductions you claim? They was like, I don't have no deductions. And I was like, okay, I guess you clearly missed that whole part of joining the business, because that was the biggest part, right?
Yeah, they missed the point.
Right. The only reason you can shift your income and get more money in your paycheck is because you're saying that you're going to offset it because of the deductions that you estimate that you would have for the year. Okay? So you can't have 0 deductions, but you got an extra $200 a month. Like, because that means that they gave you $2,400 extra per year for the year, but you ain't had $2,000 worth of deductions. You know what I'm saying? So you got to offset it. And you guys may get some calls from some of your affiliates who just listen to one side of the story. They listen to the extra money, but they don't listen to the other side of what they got to do to get the extra money. And y'all know that's how people go. They
the same people that's not here tonight.
Nah, you're right. You're right. Daryl going in on them tonight. Nah, but you're right. You are right. You are right. So you gotta get 100% of the information, you know? So any more questions, guys? I'm trying to see if I had anything else for y'all. Oh, here's another one, just since we got 3 minutes and this is a bonus. Don't quote me on it. I know it's right information, but I can't give you like the details. You'll have to do your research, but I just want to throw it out there. If you are operating, like say you've been in business for a year and you didn't make any money. Music, really? Really? Right? You let's say you paid your $35 a month, so you basically spent $420 in expenses for your business. You didn't make a profit. So actually your business is operating at what? A loss. That could be a good thing for some of you guys, because the IRS allows you to claim a loss on your taxes, which is going to help you get a refund, or you could actually defer it. I think it's like 20 years, for 20 years in the future, so that for the next 20 years, you can be deducting that loss. Not every year, but over the next 20 years. So what I would say is if you are operating at a loss and you're new to the business, go ahead and file on your taxes that you have a business and you operated at a loss. That's going to be a deduction on your taxes. So that's going to help you get more money as well. Okay? And if you have questions on that, definitely, you know, do a Google search or get with me so I can find out the details and we can kind of see how that works. But on your Schedule C, all that is a statement for your business of profit and loss. Some people don't make a profit. Some people operate at a loss. And there's that's factored in when you're filing your taxes as well. Okay? So remember, guys, before we get out of here, you're only going to get a 1099 from my econ if you made over $600 this year. If you didn't make over $600, you won't get a 1099 physically on paper, but you're still eligible to file all of the tax deductions. All right? So what I want to encourage you guys to do, man, I want to thank y'all for jumping off first of all, but get serious over the next couple of weeks and get your taxes done. Maximize your deductions. Hit me up. Let me know what your final number was. I'm going to do something special for the person with the most deductions before you file your taxes. All right?
So
go ahead.
I was about to ask you, how long could you file that loss?
You can file the loss back for 2 years, but forward for 20.
Oh, forward for 20. Okay.
Yes. And I'll send you some information on that so you can look more into that. But guys, I think this meeting is going to end because it's telling me I got a couple seconds. So I hope you got value. I recorded this. I'm going to post this up on the YouTube and share this so you can tag your teams. And if you have any other questions, y'all, don't hesitate to ask. Let's get it, all right?
All right. Good night.
Have a good night. No problem. Take care.
Good night.